Well, remember, this is about today. It's about buying a home and investing in real estate with no money down, and what does it take? Now, Madam Jennifer,
Yes, sir.
how many types of 100% financing programs are there out there?
So you have the straight 100% financing, which is one loan. You have the 103%, which actually covers you part of, that 3% covers part of your closing costs,
Okay.
part of it, but you still have to come with money down.
Right.
Then we can break the loans in two, 80/20.
Oh,
Or invest. So there's different ways of making 100% loan. But like everything is not that simple, right?
right.
So every loan that you have out there has guidelines.
Right.
Guideline means they have things that you can and cannot do. So, for instance, a FHA loan has a 56.9% back end ratio. That means that I can extend, your monies. On a 100%, it may be cut to 45. So it
Right.
means
Okay.
it will give you less qualifying because I have to strict now and construct the numbers.
Yeah.
So it's kind of a let's see if you qualify. So when people tell me, do you offer down payment assistance? Absolutely, but that doesn't mean you're going to qualify.
That's true.
Why?
Sometimes
Because
it's easier, but sometimes it depends on what the guidelines are, right? Because sometimes it's easier for you to get down payment assistance program involved, and because then it'll help them qualify for other loan
actually,
programs.
no. It's to tell you the truth, it's easier for me to tell you, let's qualify for a 3.5% and let's get you the money somewhere else. Whether it's a seller contribution, I give you the money because it's so much, like I said, 56%. Let's say a person comes in and, 200,000, like let's
Yeah.
use our friend the other day, right? She was at 56.9% on a $200,000 loan. That means that I cannot for
Can't
more
stretch
than I
anything.
can't stretch anything more. So that means that down payment assistance will be a no-no because I'm over the guideline of the program she's at 56, it's 45. So now what happens is to make this work, I rather tell you, you know what, I'd rather give her a lender contribution, or let's
Yeah.
try to get a contribution from the seller to make that gap. But it's
But
it's
luckily, she was able to come. She had a little bit
correct.
more
She
in
had a little
reserve, so
bit of
she.
money and she was able to adjust the numbers. But it's just so you have an idea. So yes, programs are available,
Right.
but is they're always not available to your particular situation.
So I have another question for you because
Okay.
we were talking about this the other day. You talked about the two. Was it 203?
203K.
So can you talk a little bit about that? Because then
Sure.
that's getting money to help like fix up a property, right?
Right. So a 203K is an FHA program that is meant for people that want to rehab, right? The loan, and it can be a light rehab or it can be an extended rehab. But what it does is it helps you buy the house, and then just like any other construction loan, you will have a draw of four, five, six draws, and it gets accommodated based on your project. There,
So is
it's
that just is that with FHA or does they
it's an
find it
FHA.
conventional
No, it's an
or
FHA product.
okay?
It's an FHA product, so
So you have to plan on living in the property
correct.
per
You
the
have
guidelines.
that's correct.
And
So
is that I had heard is it still 12 months or has it gone down to 6 months?
it's 12 months.
Okay,
12
so
months.
you have to
12 months.
occupy the property for at least a year.
Yeah.
Now, I was in a meeting yesterday, and a program is being released not by a local lender, but by a company that's going to support local lenders. They're doing rehab loans for or equity loans for those that have those 3% from a couple of years ago.
Yeah.
So they don't want to give that up, but the house need to be updated.
Okay.
So what they're doing is they're giving a rehab loan based on as improved
The
value.
CLTV, yeah.
Yeah.
We're coming up
Okay.
with that.
Yeah.
MMI is coming up with that.
Okay.
We're doing rehab loans. We're doing equity lines of credit.
Right.
And we're doing just simply if you want to change your windows. How do you call those?
Like
There's a name for that.
energy.
Yeah, energy efficient.
And so what they're doing is say, hey, your house is worth 250. If you do this, it'll be worth 400.
Mhm.
So we're going to give you the money based upon 400, but we're going to make it a second lien instead of you have to pay off the first lien.
Well, that's also smart because then and this doesn't have to be like even if you're thinking about selling the home
Right.
in the next 6 months to a year, if you're wanting to maximize your return on that, because maybe this $50,000 loan,
Right.
like EO says, maybe you're going to go from 250, so you get into now, like you would get 250 now, but put in an extra 50 grand that you could then make an extra 100 grand based on your home being repaired
Exactly.
or updated, because that's and it also go off the market quicker.
And,
Right.
in this particular conversation, as we head into break, they're doing the second loan at 3% above what the first loan is. So if you had a 3%, the second is 6.
Oh,
You
that's
got
great.
4%,
Mhm.
the second is 7.
Ah, okay.
That's
Okay.
how, hey, that's a good deal for everybody
Yeah,
around.
it is.
It
Yeah.
is.
It is.
All right.
And now seconds are being very common.
Right.
Why? Because interest rates have gone down. So those people that have equity and they have that 2%, 4% down, they don't want to move out of that and go into that 7,
And that's
8%,
why
whatever it
these
is now.
programs get really very nice.
So now we either
Exactly.
have the equity lines of credit or the second homes that you can actually pull that equity without having to touch your first.
That's
Yes,
a
you're gonna see higher
Yeah.
than usual, 13, 14, 15% second home loans, but they're available.